Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you two examples of morning gap trades from this morning that worked out picture perfect. Before we do that, let me explain a little bit more about what this gap trading strategy is all about. As day traders, we need opportunity. We need stocks that are moving at the opening bell. That's what creates opportunity. That's what helps us put money in our pockets. But the real opportunity exists for traders that can identify specific price levels where these stocks that are on the move will first be drawn to like a magnet and then have a price reaction from in the other direction. Oversimplified, it's finding the highest probability support or resistance area for these stocks that are on the move. But it goes way deeper than that because we have to identify which stocks this works the best with. What are the other criteria that we look for? What type of volume trends do we look for? How much of a gap higher or lower do we look for to qualify for this strategy? What type of profit target do we look for in each of these stocks? What type of stop loss limitation do we need to have? There's a lot more to the strategy, but here's the holy grail, folks. Traders learn exactly how to calculate and identify the specific price levels where these stocks will first be drawn to like a magnet and have that price reaction from in the other direction. We're going to get deep into the charts of the two trades from today. You're seeing a sneak peek of one of them on the screen. It's DVA, but let me tell you about the other thing I do first, and then we'll come back to the charts. Traders that want them get my gap trades sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. As you can see, this one hit the inbox at 9:01. This morning, we had 6 potential gap trades on the board. Couple of things you have to keep in mind with this list. Everything on this list, any trader that's taken the course is able to, number one, identify the same stocks, and number two, come up with the same price levels. That's the point of the course. The second thing to note is when we identify the opportunities before the opening bell even rings, we're fully aware that not all of them are going to hit their price targets. We're looking for opportunities, and the ones that hit their price targets we know are the highest probability trades on the board. That's what this strategy is all about. So let's go over the two that hit their price targets real quick. The first one was DVA, gap lower, support levels are 69.25, and then I gave a secondary level at 67.23. When you see more than one price target, those are two separate and independent trades from one another. If DVA were to drop lower into the 67.23, that's a separate and independent trade from the 69.25. Stop and profit target is about 35 to 65 cents. Keep in mind, these are minimum profit targets, and I will explain more about that when we go back to the charts. It will become very, very obvious. The second one that hit its price target today was Square, SQ. Gap lower, support levels are 75.93 and 73.75. Stop and profit target is about 40 to 75 cents. Again, keep in mind, minimum profit targets. We're back on the chart of DVA. Let's go over exactly what happened. Yesterday, the stock closes all the way up at $76.15. The stock is getting whacked at the open, so it shows up on our morning gap trading scan list. That's item number one. Item number two is we go then and identify the highest probability support level. That level came up to be $69.25. You'll remember that price level from the email a second ago. So what happened? The stock comes into that price level, makes a low of $68.85, well within the stop loss limitation, and just minutes later, the stock is already at a high of $71.64. That represents a max gain in that scenario of $2.39 or 3.5% in just a matter of minutes. You can even see in the next 5-minute candle, the stock ripped up higher right to about that price level. There's another item that we need to take note of. Look at how important that particular price level is to this stock. Even though it came down to that price level, traded away from that price level, came back to test that price level once again, and as I make this video, is trading away from that price level one more time. That goes to show you the power and importance of these price levels. Another thing that's important to mention is the why behind the strategy. Once traders understand understand why this works, they have an entirely different outlook on trading. They have different expectations. Once you understand why certain stocks will trade to certain price levels and then trade away from certain price levels, you have an entirely different outlook on trading. Entering a trade, you have a different confidence level. It removes the guesswork. You remove guesswork away from trading and you add back in confidence and you change your trading for good. The next one we'll take a look at is Square. The stock closed all the way up at 82.68 yesterday. The stock was getting hammered at the open. We identified a level of $75.93 and look what happened. The stock makes a low of $75.53, well within the stop loss limitation. Just minutes later, the stock's at a high of $77.15. That represents a $1.22 gain in just a matter of minutes. Folks, we do this each and every day. Do we win every trade? Of course not. Do we win the majority of the trades? Yes, we do. If you want to learn everything there is to know about how to trade the gaps successfully, come over to check out the course at Lazy Gap Trader. It's a strategy that you can use each and every day for the rest of your trading career. I'm David Frost. Thanks for tuning in, folks.